My first angel investment, actually, back then, that was just before I sold Marley Spoon shares for the first time. So I actually didn't really have much cash to invest. So I did actually, this was the company Solar, the solar company here in Germany. And they were looking for a CFO at the time. And so was Enpal, the large rival. And I looked into the segment. I interviewed at Enpal. Solar was too small for me, but in the end, it didn't work out. Ended up going to a software company. So completely different, but I was interested in the segment. After I declined the CFO at Solar, I wrote to the founder. I said, hey, but I'm happy to help you. I think a lot of companies hire the wrong CFOs. They look for the wrong things. So if you want me to help find and then onboard that CFO, then I'll do that for a little bit of equity if you want. And he was interested. And actually that CFO that we ended up hiring is still there today. So that was my first foray, kind of non-standards, no consulting for equity, you call it.
Hi, Julian. Super excited to have you at our Finance Unscripted podcast. Thank you so much for joining. It's been some time that we know each other, and we've been discussing about having this show together. Very excited to talk about great experiences that you had as a CFO. But also one thing that I'm equally excited to talk about is angel investing. So not that often you would see these two working out together. Curious, just to start things off, what you've learned through investing that helping you as a CFO?
Hey, thanks for having me, Albert. Happy to be here. Through investing, I guess it's more of a I'll get to what I learned, but I think it definitely shows something of my kind of character and interests, because I invest quite all over the place. Probably not how you should be doing this, but more how I'm interested in different business models and industries and so on. Then, like, the other motivation I have is really to, in a way, give back to the ecosystem, help other founders, right? Because I think that's what you see is probably still the biggest difference between US and Europe in terms of having these people who are experienced in building organizations and having had successful exits, not just the money, but just like the experience of building a large organization and going through that whole, from employee number one to several hundreds and millions in revenue and so on. So I think that's a bit of that my motivation to do that. And you asked, what do I learn, what am I most impressed or then kind of get reminded every time again? It's really, it gives a lot of energy to see this grit or resilience, perseverance of these people, of these founders that are so passionate about something that they do. And sometimes they go in with an idea and then they have to pivot and learn something that, whatever they thought doesn't quite work. And then they do something different. So to me, that's something, again, a nice reminder to, sometimes in the daily grind of your full-time job, you kind of think about the problems and the little things that lie ahead of you. And I think it's a super privilege to be in a company like this, but also to invest in other companies where people have so much passion for what they do and try so hard, not just like throwing hours, but really the creative thinking and all that into it. So I think that's always something that I take out of my interactions. And then maybe if you ask for specific, like one thing that I learned, maybe, of course, you have a completely different mindset when investing, when doing angel investing, right? Because already, okay, I've now done like a dozen investments or so. And you should go in with the mindset of saying half of them are going to be write-offs, 100%. And that's obviously, I invest a lot in the stock market and so on. There's no other investment category almost you go in with that attitude. So it's a little bit different, and you get used to losing. And is it really a loss, right? So it can be a financial loss. I had some examples where I'm happy with the outcome for the founders. Maybe it was more an asset sale, but they landed in a good environment and so on. That in the end, that's fine. And those people learn something and they build something that lasts. And sure, my financial outcome wasn't there. So I think you learn with these differences of what's a financial loss? Was it good for something? And I think all of those things give a lot of energy when you're doing angel investing.
Well, I have so many questions to dig into this topic, but maybe we can keep this topic for a little bit later, because I wanted to start a little bit from your origin story. maybe if you can share a little bit, what brought you to the finance, and what was your path so great roles that you had at the great companies over the last decade.
Yeah, I was trying to think what's like interesting or non-standard about my path, because I went to a private business school here in Germany, which I guess a lot of people in at least in Berlin, with this in startup world in Germany, went to one or two or three of these schools. But what I thought about my finance path is interesting, that I so at these private schools you tend to do internships kind of every break almost, and it's kind of the environment and everyone is doing it, and you want to gain some experience and learn about different jobs and so on. So it's super useful. But actually, I never did a finance internship while studying, and then I took a finance job. So I always consider myself have kind of stumbled a bit into the finance world in a way, right? Because then I remember running into GE, where I then started my career. That's a large American conglomerate at the time. And I ran into them at a career fair. I don't know if those still exist anyway, but I ran into a guy, and he was explaining to me how finance works at GE. And that's you really run the business together with the CEO, and that kind of finance is your ticket to the interesting strategic decisions and so forth. And that really resonated with me, right? Because my internships when I studied were corporate strategy, consulting, venture, actually, way back when, in the early 2000s. And so I was always interested in the company building aspect, the entrepreneurial side of it. And then I thought, I can run a business with the help of finance, and numbers interest me and I'm good at. And so that's how I kind of, coincidentally almost came together a little bit. Yeah.
No, that's super interesting. I really like that you mentioned that the part that attracted you is building the business, making strategic decisions. And that leads me to the question on, so how do you see the, not the best, but just like the optimal path to the CFO roles today? Is it through accounting background? Is it through FP&A background, or maybe something else? How do you see what type of skills do you need to acquire to be effective partner to the CEO of the business running the finance side of it?
Yeah. So before I answer, I have to admit, of course, that in my early GE years, I over-indexed on FP&A roles. So obviously, I'm going to tell you that the best CFOs are well trained in FP&A. I would still say that even a bit more objectively, but. And why is that? So I think the better CFOs, you of course, you have to know the numbers and not have problems with your accounting and your controls and so on, right? Like cash leaving the building somehow and you're not aware of it. But at the end of the day, I think the difference between good and great usually is around strategic topics and how much impact can you make on the numbers. And I think that's what you learn more on, let's say, the FP&A side of the house versus the controllership or accounting side of the house. Now, that being said, though, I don't think you have to have, if you're coming from accounting or from a lot of people have an audit background and so on, right? So I think it's still, of course, possible to become a great CFO. But I think then my best piece of advice would be don't skip steps, right? So this is something I repeat to younger employees or team members of mine, that they think, I'm good at this. So then that's going to be my thing, right? So I said I over-indexed on FP&A because it was my interest and I think I was good at it. But I also, within my roles, I could explain to you how sometimes I took slight detours, or I took on projects and assignments, or tried to get more exposure to accounting related topics. So then I could also build that skill set, right? Because I think you really sometimes you notice when you meet other CFOs and they've skipped steps and they don't really, either they didn't do enough accounting because they maybe did banking, or they didn't do FP&A enough, and you can tell the gap that they have, and if you cannot fake that later, so to speak.
Yeah. One thing I was curious, Julian, is like, do you think the needs for CFOs have changed over the past 10 years? And if so, how? Would be great, because you've seen this in the companies that you've been working with. So curious to hear your thoughts there.
Frankly, to me, not so much, right? And I think that's a good part. Yes, about my origins, right? So I ended up staying 10 years at GE at the beginning of my career, because I think it was a really good training ground, and I learned this. What I think, if you read on LinkedIn or some articles or certain finance blogs, then this is kind of the modern CFO is always someone, what I was just explaining also, that helps run the business, right? That knows more than the numbers and feels responsible also and so on, right? So for making the numbers better and doesn't just like pass over to other departments. Here's your report card for the last month or quarter, and now do something about it. But really is there to help and drive change. So to me, that's how that was. Now I was indoctrinated, or how you want to call it, taught at GE, which I would still consider pretty modern. Right? You don't always see that at organizations. Yeah, if you ask me personally, of course, I think the level of versus earlier leadership roles, the elements of leadership that come in, leading a team, ever bigger teams, and so on, become so important, right? I don't know if that was easier 10 years ago, but just to give you a few thoughts around what I think is on my plate and what I need to be good at in my role nowadays. AI will talk about it, I'm sure, right? What that brings and to team dynamics and how we work and so on. But I would also say, without jumping to that topic now, AI is also not fundamentally changing my thoughts around like how things should be set up. It's more like then in the details of how you implement some of those same principles that were maybe always there also 10 years ago. So I'm not a huge fan of, I know there's a lot of talk about modern CFO and is this all changing? To me, not so much. So same underlying principles are probably still true that were true 10, 20 years ago and what made a good CFO back then, but it's more prevalent. There's definitely more discussion around being active in these more strategic topics and in what matters to the business, right?
Through your career, Julian, you went through a lot of stepping stones for each of the roles that you had. If you were to give an advice to young and aspiring finance professional today who would like to be a CFO in the future, what would you recommend? How to prepare themselves for being a very effective partner to the leadership of the company?
Yeah. This similar to what I said earlier, this variety of experience, if you want to call it that, I think it's quite important that you see different things. So I think sometimes when I in these career development discussions or people ask me that are early in their career, I think they sometimes think too much in terms of what's my fastest way. And probably I was thinking the same way when I was in their shoes in my first, 5-10 years of my career. What's the fastest way to get the CFO title? But I think what really in the end, so at GE it took me 8 years, and then in startup world, I always took over as head of finance or CFO. But what really prepared me for that was this variety of experiences. Yeah. And I think also what I mentioned, for example, I was heavy FP&A focused, but I can tell you 2, 3, 4 projects that were very different in scope and what I learned. And I think also those projects are important to talk about because I went in certain things very deep for a short period of time. Sometimes it was only 3 to 6 months. But I think also to learn that, to go really deep in one thing, no matter how useful it is. So in best case, you pick something that's very useful. For example, I did in, I think 3 years into my GE tenure, I built, it sounds as awful as it was back then, but I built cash flow reports for a new consolidation system for all of GE. Think about that, with hundreds of thousands of entities or whatever. And the chart of accounts was, a few thousand accounts long.
Was it in Excel?
We were in Oracle world, so it was kind of an Oracle derivative, but mostly it looked like a giant mapping table with all of these 50, 100 columns of all the different reporting requirements, something like GE would have, and how it all rolls up in the various different pieces of logic. And of course, to this day, you can just wake me up in the middle of the night and ask me like, this account, where does it go on the cash flow statement? And I would know. And actually, turns out, I didn't know at the time, it turns out that understanding the balance sheet and cash flow statements at that level, very few financial professionals, even CFOs, know, right? And this was something that eventually even turned out useful. But I think more the skill that I learned was to really become expert at something and really sink your teeth in it. And because you learn so many meta skills about how to structure a problem, how to tell others about it. So after that, I was onboarding for much more senior people than me, and then how to maneuver that system and so on, right? So you you learn so many skills from just being an expert in something, whatever that is. Yeah, ideally something like cash flow or balance sheet that you can later still use. But I think that's something that sometimes gets underappreciated when people look at, what's how does my career best look on LinkedIn, and that my title always gets bigger and so on. And usually you have to a bit swallow the pill and do something that's very useful and more of you learn skills and you have different experiences rather than, how does it look on a career ladder?
Great. So basically doing different things, going deep into some of the topics and becoming really a great subject matter expert in what you do. So when I look at your career, so a lot of companies you work with are venture-backed companies, and fundraising is a big topic. So I wanted to touch a little bit on that. So you've done it multiple times. So probably have like some interesting fun stories around there. But just like to start on this topic, curious, sort of like, how do you think about the timing? How should founders think about the fundraise? When is the right time? When is the wrong time?
Yeah, I mean, if you're alluding to external factors, I would say I'm not a huge fan to have that impact you too much. So obviously, yeah, if there's a bit of a bubble going on, like maybe now for certain topics, then definitely use the opportunity to grab more while you can. I think that's a general maybe guideline in terms of have a good financial model, so when you run out of money, appreciate how long it's going to take, probably 12 months or so for the whole process, maybe if you're fast 6, but to not be too much governed by external factors or all of a sudden understand, I now need to raise and we need to be at the notary in a month or so. That's obviously what you're desperately trying to avoid. And then in that same realm, probably in my career, it's always served me well to raise it slightly earlier or get prepared a little bit earlier or raise a little bit more, right? So it was always a good decision to say, we wanted to raise 30 million and then because of the round dynamic, we raised 40. And then you thought at the time, do we really need it? Do we want the dilution? And then, things happen in the business or you see more opportunity and then you're happy you raised that extra 10. Yeah. So I think those are definitely a couple of things where I would say, be prepared, always be a bit more conservative with that in terms of how long it takes, how much you want to raise, when to start.
When you look back at all your experiences, what was the most challenging moment during the fundraisers for you?
I'm sure we'll talk about my IPO experience at Marley Spoon, my first startup scale up when I right after I left GE. An IPO, I think anyway, is always challenging. We did it in 6 months. We basically decided at the end of 2017, around Christmas, we did some of this early roadshows, investor meetings, and then we had good interest. And then we said, let's do it. And then we were publicly listed on July 2nd of 2018. So it was literally 6 months of work, which obviously those 6 months, I can easily tell you were the most stressful time of my life. We can maybe get into the different dynamics of why we did it relatively early in Marley Spoon's journey. But yeah, that was an interesting time in that segment, because with Marley Spoon, what we were doing, without going again into too much detail, but we were a fast follower in the segment. And that's maybe in general something that is not so easy to raise money for, right? If you're not the inventor of that or the biggest one in something, I think a lot of VC investors are used to kind of this winner takes all mentality. And we were a consumer product where a lot of times that's not true. We can have multiple successful products. And so I felt like for different reasons, it wasn't so easy to raise in that segment anymore, which contributed to our decision to list the company relatively early, because we thought that was the way to still raise a lot of money at that particular point in time in that segment. So that was probably easily the most interesting, stressful, memorable fundraising story I have.
Yeah, as well on this topic, curious to talk a little bit more about that, because what was the stage of the company when you decided to go public?
So the business plan called for something like 100 million in revenue in 2018. So to close out that year where we listed, and we were still very much in hyper growth. So, I mean, don't quote me on this now, but I think we were, I think it was a bit below 100% growth we had in the prospectus. But yeah, I mean, it's still, we were just out of that, when you grow 100% and more every year, and now the numbers get so big that that's increasingly hard. So it's really at this We were probably not even like a full-blown scale-up yet.
And it was Australian Stock Exchange.
Yeah, interestingly, yeah. One of the things that I think we did super well at Marley Spoon was running the company based on metrics. CLTV to CAC, so your lifetime value versus your acquisition costs, which how you should run a consumer business, I think. And Australia always had great metrics, and then we kept pouring more marketing money into the Australian market, and it kept growing, and the metrics stayed, especially retention, stayed pretty strong. And at the time we listed, Australia was our biggest market. So we kind of, despite being Berlin-based, we told the story of this is an Australian company that needs additional funding for its international endeavors, which was a bit backward logic in the end. But that resonated with the local investors, and it's a fairly developed capital market, because they have a big private pension, like mandatory private pension system. So they have huge pension funds, for example. And then from in our dynamic of how big our IPO was, so roughly we only raised like 50 million, right, with the IPO, and 100 million company size. I think that was a bit too small for Europe, where we also were active, but was a bit smaller market. And then in the US, we had the special dynamic at the time that before us, HelloFresh and Blue Apron listed, which were global competitors to us. And Blue Apron is probably still to this day one of the worst tech IPOs of all time. And because of that, even though that had a lot to do with how Blue Apron was run versus how maybe HelloFresh and Marley Spoon were run, we had this dynamic with US investors that were all like, "Oh, you like Blue Apron? Okay, we don't want to go anywhere near that." Yeah. So you can list smaller companies, I think, in the US. It's a bit more costly and maybe takes longer than the 6 months, but there the investor sentiment wasn't great for what we were doing. Yeah.
So maybe I would love to understand thinking that you were having during that time. So the business is around expected to be 100 mil, based in Berlin, with Australia growing as the biggest market. And you're a follower on the market, where sort of the access to private capital is probably a little bit constrained given the competition. And sort of like you're like, okay, let's just do an IPO in Australia. So how would what was the process of sort of like getting to that conclusion? Because like if you think about the current realities, probably not straightforward decision.
Yeah. It's and we didn't even mention, right? It was 4 years after the company was founded, right? So again, it's a testament to the high growth we were seeing, but obviously a lot of, I would say, just fortunate decisions I made as a CFO, or we made as a finance team, in terms of doing international accounting from day one across all countries, right? With the same, so then the consolidation, all this was easier. Or we already got a Big Four audit done in 2016, which was really our second full business year, if you so will, with any kind of numbers that were meaningful, which was early, and we didn't have to do that. But basically that saved us time doing those 6 months, because otherwise we would have had to go back. Right, when you list in 2018, you show 16, 17 results, maybe even 15, because we did in 16, and you show prior year numbers. Those were all audited already at the time, and it's much more painful to then go back in early 2018 and still audit 2015 and 16. Much more costly and probably takes time, and then we wouldn't have been able to list in 6 months, right? But yeah, as you said, mainly the decision was from one of our investors, Lakestar, actually, because they had actually pushed us into the Australian market back then, and they had then heard, of course, also through their own channels and from us, how it was hard to find, as you said, private money. We were a bit bit too late for VC because there was already HelloFresh and others, and a bit too early for PE because we weren't yet profitable. And then we had a separate process actually doing those 6 months with the bank to look for private investor or a strategic investor. And that in the end could have probably worked with a strategic, but that was, of course, huge repercussions of how you run the business and so on, and whether you want that. So we had this idea, and then explored that, and based on all those factors, from how much you can raise and what type of investors you're getting in, non-strategic, the IPO route then was really the most attractive one. So it sounds very formulaic, and it was, of course, very exciting at the time. I was flying around to New Zealand to meet investors, because they invest in Australia, and then And then in the end, the bankers, gave the thumbs up. I think we had a bit of good fortune that there was another German company. Like we didn't have to relist the entity that we were in, like a German stock corporation, like that was already approved by the regulator. So there was a few stars that aligned that made a fast IPO process like that also possible. But in the end, we had a set of criteria, and that was the dominant option in the end. Yeah.
It was an incredible story.
Sometimes I take my fingers and count really whether it was 4 years. Yeah, but it was, the company was founded in 2014 and then it was listed in 2018 now.
Yeah, maybe one last question on fundraising topic. When you compare fundraising for operations heavy businesses and now you are part of the a fintech, more regulated software business, do you see differences sort of like in terms of the approach? Curious to sort of like get your learnings on that.
Yeah, I mean, some of the things that I alluded to with this no fast follower and whether a segment is kind of in or out, right? I mean, you're building an AI native company right now. I guess it's also for a reason, right? So that is something that investors are super interested in. I think using that to your advantage always helps, right? There's probably a software over hardware over physical products preference in most VCs. I think that's also safe to say. Otherwise, I think you can, of course, right, as you see with defense companies right now, right? They have a physical product. A lot of them do. So this in and out factor is probably even more important, right? So I wouldn't say per se that one is easier or the other. As it's more this what's in, what's out. Is it fast follow? Is it more like a typical business that VC is used to seeing? I think that's probably even more important, right? And then I think to me, I mean, you asked a bit about also like advice or how do you do fundraising? And then it's always about, with these dynamics, can you create this sense of urgency on the investor's side, right? And that usually means you talk to a lot of them and you manage the process in a certain way. And also the Marley Spoon CEO always used this image of the investors have to think that the train is leaving the station, right? And they can either jump on or not. Now, if everyone thinks the train is not leaving the station, I can still smoke on the platform and wave for what's happening here, then that's not the kind of fundraising you want to do, right? So there needs to be a sense of urgency and you need to create this positive momentum. That usually a lot of times has to do with also how you structure the rounds, how many funds you talk to. Some may be closer and you let in a bit you get a bit of an kind of earlier access or faster access to things, and others where they all talk to each other and so on. And so maybe it's good sometimes when they bump into each other in a pub in London and talk about it's like, oh, you have the access to this, and like, oh, well, we don't, right? So it's like how you play that a little bit, so they have a bit of this fear of missing out, and you create the sense of urgency. I think that's definitely the name of the game, right? So that's almost, again, it's easier in AI, for example, now, right? Or when you're not in fast follower or in business, but still it requires you to manage the process in a certain way. Yeah.
We discussed coming back to the angel investment topic. I'm really curious to deep dive into this. A lot of people want to do more of angel investment, but then it's not clear where to start. Can you share your story? What was your first investment? How did you get into investing in the first place?
In general, most of my investments came through some kind of, I knew the people, I networked. I quite honestly, a lot of times, I think some investments, for example, came just through maybe spending a bit of time or helping someone that there was no immediate benefit. Like you didn't know they were going to start a company the next year. And then when they did, they remembered you and said, oh, this conversation was quite helpful, or this person was helpful to me, and I would love them as an angel investor, right? So I've definitely, out of my dozen investments, I have a few examples of, I was, a judge at some startup competition, or there was a contractor at Marley Spoon, and she was helping us with something, and then she started her own business later. And it's just like when there's interesting people that you think are this like founder material, right? That have this grit, perseverance I talked about, that that have interesting, innovative ideas, then I think you meet them in your life, maybe here in Berlin or in other places, certain places more than others, in Amsterdam maybe too. And then you help them with whatever they do, or you take an interest in when they run around in your company as a contractor, and good things will happen, right? And then founders talk about the angel investors, of course, and once you have investments, to then say they may know some of your other founders and then say, or your founders recommend, they know other founders and say, hey, this is actually a great angel investor. He can help or she can help you with something. And you asked for the specific experience of my first angel investment. Actually, back then, that was just before I sold Marley Spoon shares for the first time. So I actually didn't really have much cash to invest. So I did actually, this was the company Solar, the solar company here in Germany. That was, they were looking for a CFO at the time. And so was Enpal, the large rival. And I looked into the segment. I interviewed at Enpal. Solar was too small for me, but in the end, it didn't work out. I didn't go for that. Ended up going to a software company, so completely different. But I was interested in the segment. And then after I declined the CFO at Solar, I wrote to the founder. I said, hey, but I'm happy to help you. I think a lot of companies hire the wrong CFOs. They look for the wrong things. So if you want me to help find and then onboard that CFO, then I'll do that for a little bit of equity if you want. And he was interested, and actually that CFO that we ended up hiring is still there today. So that was my first foray, kind of non-standards, consulting for equity, you call it. And then later it was these kind of network things or recommendations or people I bumped into. So not super strategic about it, I have to say. It's more do I like the founders, do I like the space and the general idea that they have of the problem they want to solve, and then I invest there.
What was the return on your best investment so far?
Well, they're all, since I go in super early, right? I only have, I think 3 or now 4 that were kind of write-offs. Yeah. But again, I would say 2 of the 4 they landed, the business was sold, just at a loss. So I think there was something created of value, which I'm happy for the founders that it turned out that way. And sometimes the founders even went to those companies that end up buying. And otherwise, probably my better angel investments are more indirect through funds. Yeah. So at some point after a dozen investments, I also said that it's maybe a bit time consuming, or I cannot be there for all these different investments as much as I want to. So then after a dozen, I also told myself, I'd rather invest in interesting funds. And they have maybe anyway access to better deal flow, and you can still support here and there on individual cases, but then your euros go a lot wider, right? And you can maybe invest in more interesting companies that have more of a financial return profile. But I think overall with my own investments, kind of the idea is to have if I get my money back at the end of 10 years, roughly, or a slight return, then I'm happy. And I made a lot of interesting connections and met these people, and some companies that lasted came out of it. And I gave back to the Berlin ecosystem or the German ecosystem here. And I think that's also great. Yeah. And then hopefully the financial return comes from my fund. Yeah.
So you are so deep into the world of the finance and also making investments. Curious if you were to make 3, 4, 5 bets in the finance tech, in the office of the CFO, what would be not necessarily the companies, but more of like directionally areas you would invest today?
You said what would I invest in, or what are the areas that interest me?
Yeah. So the areas that you're interested in. So if you were to build a portfolio today in this space, where would you put your bets?
Yeah, I think what's obviously a lot in the news recently is this native AI ERP systems. I understand where the hype is coming from. I think it's still a long way to go. So it's quite early to say like which ones of these are really have enough substance and longevity and so on. But I having seen Oracle at GE and Microsoft Dynamics or NAV at Marley Spoon and other systems, I think that definitely there's disruption that needs to happen, and you can make that better in a way. But it's also quite complicated to do. So super interesting area. I talked to a bunch of those founders, just out of curiosity also. For example, of Rillet and Light and Campfire in the US, and it's a super interesting space. I'm sure you can make a bet that makes sense, but which one is it's hard. I think. You heard me say before, so I'm partial to FP&A, right? That was my more professional upbringing. So I think next to the ERP, or maybe even more so, like what I'm as a CFO, where's my willingness to spend is probably even higher on things that make analysis and forecasting and so on, and collaboration with other departments on that easier. So also at Upvest here, for example, we use Abacum, which is a modern planning tool. there's a couple more like Pigment or so out there that have really made a lot of headway and found a lot of customers in recent years, similar to Abacom. So I think that's probably even have a higher, or at least as much a willingness to pay for these planning, analysis, and then collaboration tools with other departments. Like that's really the ultimate thing where I think you can, when ERP probably always has a certain limited set of users, mostly restricted to finance and maybe a few others in operations or procurement or so, possibly HR. But then we have a few use cases with Abacom, for example, on our roadmap here at Upvest, where people from risk, people from growth, product could all be working in that platform. And so that's quite impactful, A, and then B, right? The more people are in it, also the more you think, okay, it's solving more problems, and then have a higher willingness to pay, right? So I think that's continues to be an interesting part of the stack. And then maybe also, I mean, I know, Albert, we talked about this as well, right? What you or others are trying to build. We are in a lot of countries, like Germany is a poster child of, right? You're stuck with like Datev. Others are stuck in their NetSuite, Oracle, Workday, whatever environment. And so I think doing automation on top of that, where those tools will never get to, or only get to in 3 to 5 years, I think that's also super interesting, right? Because I think, I wouldn't underestimate how many people are stuck in their systems. Not just because it's hard to migrate, but also because they have a team that knows how that system works. And so to the extent that you can get more out of that spend, or shift some of that spend into make these people more efficient, or spend less on Oracle licenses and more on something else. I think there's a lot of budget to be had, and so I think that there surely will be some large players that come out of that, or whatever that is, then automation of certain workflows, or having certain analysis be embedded that otherwise in an accounting system you don't get out, and so forth. So those are probably maybe 3 areas that I'm most excited about. I would also consider investing.
Yeah, very interesting. And definitely this space is getting a lot more attention in the recent years. So very exciting to see where all of this will evolve going forward. So next I wanted to chat a little bit about building high performance finance teams. And you've been part of the many interesting early stage companies. When you come to, say, the company from A to C, or even a little bit further than that, so how do you think about the teams? Or what are the key roles that are important for you? Like, what are the, like assuming that the teams are not fully built in there, what are the 3 first hires would you normally do?
Yeah, let's assume that it's definitely a safe assumption. When I was finance person number 1 at Marley Spoon, but also the last 2 companies I joined, I mean, they were Series B, and most of the time at that level, you still at that stage, you still have a lot of building and team building and process building and so to do. I always look at of course, head of accounting or whatever level that is, would be someone more senior. Here, when I came in at Upvest, was already at VP level. But that person is super important to me. Again, I over-index on FP&A and the, let's say, strategic side of finance and analytical forward-looking side. So having someone that complements my skills on accounting, reporting, tax, controls. So I'm happy to have a conversation about that here and there, and hold my own, hopefully. But it's not my passion. It's not how I think I spend my time best. So this head of accounting role always super important. When I started at Marley, maybe secondly, and I was literally first finance person in the door. The first person I hired was it's called a senior FP&A analyst. So at that point, still early days, you're building up the financial model. You're still fundraising almost every year, and to just have someone, and she had a banking background at the time, have someone that owns the model and all that work that goes into that. So you can compartmentalize that and say, okay, that's taken care of, and I can focus a bit more on the structure of the model and making business decisions. And we pivoted after a few months quite heavily at the beginning, and to really have your mind set on that. I think it's great to have that, let's say, FP&A person with strong modeling background quite early on. Come into places where then the models were a bit adventurous, let's say. And then the first thing you had to is bring in someone and completely redo that. And then another one that's that I found myself now 3 times I've owned it. I don't think it has to be under finance ownership like forever or always, but data BI, right? So business intelligence or analytics, we call it here. And that's again to my affinity like for financial modeling, and then analyzing against that model is super important. But like that model will be complete garbage unless like the underlying metrics, make sense, are properly defined. And usually those come out of those would come out of a data warehouse, right? So let's take Upvest as an example here. You can trade and hold securities through us. So trading volume, right, would be one of these like underlying, let's call them operating metrics. So I have analytics people here in my finance team, and basically this is one of my first hires here, was to bring in a fairly experienced person that kind of does the whole data model setup in the beginning, and the definitions of what is trading volume, and how do we set it up in our system so it actually comes out right? Because nothing worse than you're tracking something like how many assets do we have on the platform, how many users, how much trading volume per month, per week, whatever. Those numbers are wrong, you make wrong decisions, right? So I think that's think about your financial model, the key assumptions you take. Like if those numbers are like garbage in, garbage out, then your whole model now falls apart like a house of cards. So to me, usually making sure that either that's covered somewhere in the org, but a lot of times, when you go in early, because you asked, like when you come in early, then you find that this is kind of not really taken care of properly. And then I think there is a lot of value to owning that in finance in the beginning, because we have this data quality lens, and you have this connection to the model, like which 4 or 5 operating metrics are really important, and how should they probably be defined so they make sense and they really relate to revenue generation or cost generation, right? So I think those 3 probably would be early favorites of mine. Head of accounting, senior FP&A analyst, and someone who leads and has a bit of experience with data BI.
And what are the fundamental skills that you're looking for? Also, do you value more experience or maybe growth potential?
Probably potential, but let's make that a bit more specific. So two things that they're my favorite interview questions. Also, they evolve around learning ability, and probably curiosity always. Also that I sometimes just ask, even from private life, like, these people have a passion for something. And again, what I mentioned earlier with, can I throw you on a topic and you get excited about, no matter how mundane, or can you go deep and really understand things at a very low level? And sometimes in the interviews, people tell me even advantages out of their personal life when they learned a sport and how they try to get better at something. And you just want to see that ability that they see a problem in something that's important to them, and then how do they go about and learn something new and fix it. So that's something I love to ask about and find out more than, have you done this or that? And then again, this what we talked about in the context of angel investing, right? So I love to ask, what was the most stressful time in your work life? And what happened? Why was it so stressful? And how did you cope? And not just show this resilience and grinding through and sticking it out and so on, to just show that people are willing to put in the efforts. And even when sometimes the outcome is unclear, or for different factors, there's stress involved, and how did they persevere through that? Because in startup environment, especially, you will have these, could be an IPO process, or it could be something 2 levels below that. But there will be these ups and downs and these dynamic phases where something is super urgent, and so you want to understand how people react to stress, and being thrown into something where it's not so easy to see what the answer is, or no one has solved it before. So right, so those are usually traits I look for in people now.
Yeah, impossible to survive in startup without that. It's just like everyday problem solving.
Yeah, exactly. And then it can be more junior, right? So I think in finance I think definitely you need both, and different profiles go into different roles, right? In the finance team for sure, in different let's say sub functions of finance. So understanding that dynamic, but those by and large probably the 2 things I look for usually.
You already alluded a little bit into topic of AI, so I wanted to jump into this as it's obviously what everyone is talking about, so we cannot avoid during today's conversation. But I wanted to think through this together in the lens of like future of finance. So maybe just to start on this topic, how do you think about AI experimentation in your team today? What type of things you do, and how do you encourage the team to basically to experiment and do more in this space?
Yeah, I think we're not an ultra modern team on this one yet. No, to already lower expectations here. So of course we do the things that I think most people do around researching topics and writing documents. And I think you can save a lot of time by having AI start with the general structure, or here's the 10 points you should think about, and that can save you a lot of time, and then guide your subsequent thinking and how you structure a document. At Upvest, for example, we have a great written document culture, and so for that, it's not just when you start with a blank page and there's a topic, then I think that's a great way to cut out a few hours of work and immediately get to the value adding parts that you can maybe not find in ChatGPT or so. Starting to experiment a lot more in finance, but also in operations here with of course these repetitive tasks, right? Which we have a lot in finance, but yeah, at the same time, I think why we're not I would say leading very fast in this topic is also you have this. We have an audit every year as a regulated institute, and also you want to be very mindful of certain changes, right? And we don't just change something and then it gets broken and so on. That creates a lot more work down the line, right? I think probably also for the longest time in my first year or two here, didn't experiment so much because the team was super lean. We're now staffed up after our Series C last year a little bit, so that helps. But so I would say we're just really getting started with this, and I guess we're also looking and investigating in the usual parts, like what we talked about, also closing tasks that can be automated or accelerated. Certain things around invoicing, where we're looking at tools. This Abacum, I think, is investing a lot in AI. So we're even co-creating some things with them and looking into their roadmap here and there a little bit in terms of the easy analysis tasks, right, that you can do. So yeah, there's lots of plans and but yeah, also a lot of no hesitation, I think, in a lean team, regulated industry to just do things too fast. I think we also, our personal history with systems also, that we upgraded our ERP earlier this year, right? So that's also then a time when maybe things should settle a little bit before you start the next large system upgrade project or so, right? So I think next year there'll be a lot more happening for us in those areas that I outlined, but maybe to explain a little bit why we're a bit generally cautious, given the system environment and what we do.
Yeah, totally. That makes sense. If you were to give one workflow to AI, what would that be? So you're easily, I would love AI to take care of this.
Yeah, I think the general topic of reconciliation, right? So you have two whatever random sources that's supposed to have the same data, whether it's your bank account and your ledger or your a sub-ledger system in our ledger system. So I think that's quite powerful because that topic of reconciliation you use in so many different sub-disciplines. So that would be kind of the high-level answer. Then one specific thing that I've never seen a good answer to, and now I mentioned to you, we're looking into invoicing tools. So this is outgoing invoice receivables. So usually the tools you can get, they're all about kind of the process from the time you know what to put on the receivable or onto the invoice. Right? So I need to send an invoice of 50K to this customer, and then they help you with that process and the follow-ups and matching it later with the payment. But obviously the part before, which can be very customized for your company, of how to come up with the 50,000 or what's to be charged. That's something that we're super interested in. We're doing very large contracts at Upvest, sometimes a bit customized in their clauses and so on. So making that connection where an AI can just read out the contract and then notify the team and say, this invoice needs to go out now, please double check, but then it can go. I think that would be quite powerful, because everyone has their little tweaks in the contracts or the way they price and so on. So for an AI to understand all those nuances, and it can generate the amount on the invoice, not just then the PDF, and track the process from the time the invoice goes out. I think that's a huge unsolved problem.
Yeah, it's incredible that we still sort of have those things being done manually, because it feels like there are lots of attempts to automating that already. But looking forward that maybe in the future the teams can focus on a more work related to insights and strategic decisions. Julian, maybe just to wrap things, wanted to ask a few rapid questions to you. For the first one, what advice would you give to younger yourself breaking into the CFO world?
Yeah, to be funny, follow the advice of more experienced folks. So I think sometimes, again, I think it's back to this career planning and so on that sometimes I see with younger folks on my teams or that I run into. A lot of people like myself, like others, don't have to have 20 years of experience, but just a little bit more experience and how you pick jobs. And again, how do you get the variety of experiences and think more about skills and experiences you acquire rather than the title. I think that served me really well. A couple of times in my GE time, I was ready to jump ship because now I want to do something new and this gets boring and so on. And my bosses or my boss's bosses were always saying, no, you're not going to this. It's not interesting enough. Yeah. And I was pissed at the time and I wanted to go anyway. And then something better came around. And then looking back in hindsight, it was 100% the right decision. Yeah. So to really, it's not a logical problem to solve. Sometimes there's too many parameters. So really to rely on people's experiences when making your career moves. And then quite honestly, to me, maybe more personal, that is a bit of a miss, I think. I had only probably after 5 years at GE, so halfway through my tenure there, I had like the first real good manager, CFO of the business that gave me super actionable, also critical feedback. And I remember at the time, it was really like opening my eyes and I was almost get a bit mad at my prior managers because they were all like, of course, it was going well in the big scheme of things, but there should be always something, right? And that's sometimes I annoy my people that work for me that I always point out, okay, everything great, but here's one thing at least that you could still do better. And this is out of my motivation, of my personal experience that in my first 5 years, I think there was a huge missed opportunity because everyone was just like patting me on the back and giving me interesting jobs or promotions and saying everything is fine. But of course, looking back, it was not fine. I lost 5 years of being able to work on certain things that I then worked on only since then. So seek out that critical feedback. Maybe even work with the coach a bit earlier. But if you feel like you don't have it from your manager, but I would also say myself, I probably didn't seek that out enough. Right, I was happy to get the pat on the back and get promoted and not ask questions and just move on. So I think that's a huge missed opportunity in the beginning. Yeah, you have so many development needs in the beginning. I had so many development needs in my 5 years. I couldn't fill another hour of the podcast here. But no one told me in a way, right? So I wasn't seeking it out, if you wanted to put the blame on me more. Yeah.
What is a career decision you're very proud of? Others thought not obvious, maybe even somewhat reckless at the time.
More reckless, I don't know. I mean, the GE decision after the business school, where a lot of people went into banking and consulting, was probably a bit non-standard, but it's a large company still. I don't think reckless is anywhere close. I think probably the harder decision was really leaving GE, because I was on a nice path, right? I mentioned I had the first CFO gig of a small segment in the energy business after 8 years, and they just sent me on this 2-3 week training in the US where you're about to become like one of the, I don't know, we had 300,000 employees, one of the top 10,000 or a few hundred in finance, where you're getting a certain executive band or whatever it was called. And then you get a bigger CFO job. And then so you're on a nice career. When I left, and I told them, hey, I'd leave for the small startup, they said, oh, you want this promotion? We'll find you a job tomorrow. And also it would have been easier to stay, right? I had a great network from working in the US for several years. I was kind of in a very comfortable situation and had my career like for the next 10 or 20 years even planned out. My main motivation again was to learn something new and challenge myself. And from having done like one CFO gig at GE, I kind of still to this day, I consider these CFOs there, and I was one of them, like more 70% CFOs, right? Because you don't do fundraising, you don't really decide on the systems, because you don't decide on tech strategies, you don't decide on treasury stuff. And so there was like, oh, there's a lot to learn in finance that I really don't get exposure here at GE because of the way the CFO role is structured. So if I want to learn that, I need to be a standalone CFO somewhere. So that has paid off multiples of times over, and definitely wasn't the easy or the comfortable decision, but I'm super happy with it. And that was maybe a bit kind of, some people were, I don't know what my parents were saying. I usually didn't intervene so much in that, but yeah, there were definitely some people that were saying, "Oh, why don't you just stay, in a great trajectory here? And what are you trying to solve for here?"
What finance skill will matter the most 5 or 10 years from now?
Probably, again, my FP&A bias coming through, but influencing others. No, that I told you, right? So for me, the ultimate motivation in finance is still to run the business, but I don't run anything on my own, right? Finance is a support function. So ideally, I don't even know, I'm not even the ultimate decision maker on a lot of things, at least in my world. That's a good thing. So how do you influence others without, I always say here in our finance onboardings that I do, for example, with employees, when they join us, I say, when we have a very trust-based system, we'll probably find the shit you'll do when you spend money and you shouldn't have. But that doesn't mean I should have an elaborate pre-approval PO system that restricts everyone in moving fast. So how do I influence others? How do I get my thinking, ideally, even into their decisions without me being there all the time or having to approve everything, right? So how do they seek me out when the product team is doing a decision and say, let me just check with finance, or when an account executive wants to do something on the pricing and say, seems a bit non-standard. Maybe I'll make a better decision if I ask someone in commercial finance here, part of Julian's team, right? That to me is the highest standard in finance, where you can influence without having to say, you have to come to me, right? Because I wear the finance badge. And so the underlying skill there is influencing others, right? And making sure that your views are reflected in how they decide. And that will not go away through any kind of AI or automation, so on, right?
That's true. Thank you so much, Julian. Really enjoyed having you on our podcast and having this conversation.
Thanks for having me, Albert.